Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Stephen Parker's in charge of thoughtful conversations for JPMorgan Private Bank. And can we get Jamie Dimon in a bow tie? For those of you on radio, Parker's just rocking the fashion bow tie here. It's a loud abrasive thing I never wear.
It's a lot for me.
Can we get Jamie Dimon in a bow tie? On my hand, I could never get in a bow tie.
I would love it. I mean, Tom, if there's anybody who can convince him, it's got to be
I say, if I see him in Central Park when he's running and I'm not, I'll see if I can get it done. What are you hearing from your clients? JPMorgan Private Bank, I want to know the team of people you have, your ears to the rail. What are you hearing from JPMorgan investors with you?
Yeah, so the big question, we've obviously had a couple of years of very strong equity market performance, and the question is whether or not this continues. I think the two biggest themes, and we talked about this in our outlook, are questions around AI and are we in a bubble? Can that momentum continue? And then the second one is kind of the countervailing force of increasing global fragmentation and what that means. And then on top of that, you sprinkle on some questions around midterm election politics and policy. How is that going to impact us? And there's some, I think, healthy skepticism around the outlook for equity markets, but we think the opportunity remains.
Steve, are your clients bringing up geopolitical concerns? I mean, are they actually talking about and saying, how do I position myself now?
You know, on the margin a little bit, although I think we've done a pretty good job training clients to remember that geopolitical events rarely have long-term structural impacts on markets. You may see, a short-term market dislocation, but the fact that we had, the bombing of the nuclear facility in Iran and what happened in Venezuela and oil markets have barely moved is sort of a reminder that you shouldn't over-index on geopolitics. Now, in a world that's increasingly fragmented, we are getting questions around what you can do in your portfolio to diversify, and we do think that gold remains the best way to continue to do that.
Gold?
Gold.
At JPMorgan, I'm shocked.
Yeah.
I can't imagine the vault under the new building. Can you see it? It must be, it's like Fort Diamond or Fortress Diamond, something like that. Tell me how you fit ETFs in. Are the days gone where you do individual security analysis and buy individual stocks at a private bank?
No, the answer is no. I mean, that's not my role, but we have a great team of equity strategists and researchers, and we think there's still a great opportunity.
So you're not just going to the ETF, do this, own 10 ETFs.
It's a balance. I mean, whether it's single stocks or active managers and then passive strategies, it's not a one or the other. In our view, it's a combination of the two, and focusing on, where can you use passive exposure in the most efficient markets, and where are the opportunities where you're going to see greater dispersion, less efficiency. That's where single names or active managers can come into play. And one of the things we've been talking around with this AI story and the AI beneficiaries as this broadens out, the opportunity in active management related to identifying who are going to be the biggest winners in that space beyond the tech sector, I think will be a story that will play out over the next couple of years.
I want to get back to gold. Why are you so high on gold? I mean, some are saying really like gold at $5,000 an ounce. Is that a possibility for this year? It
is. We actually think, our target is 5,200 for the end of the year. We've been bullish on gold since the beginning of last year, and many people thought that we were too bullish then and too bullish now. To us, it's really a kind of a multifaceted story. The biggest driver of what we think will lead to upside in gold is the diversification of central bank balance sheets. And last year was an important reminder with everything that we saw with the weakness of the dollar. Central banks around the world are looking to diversify. That's a big source of demand. And then on top of that, in this world of greater fragmentation and political uncertainty, gold is where people are looking as that diversification benefit.
When we hear investing in gold, break it down, because what are some good ways people can get exposure to gold without like going out and buying the bars and sticking them under their beds?
Yeah, I mean, generally speaking, we want our clients we prefer exposure to the metal itself rather than to the gold miners. And you can do that either by buying physical gold or buying ETFs that represent ownership in the physical commodity. But it's a commodity over equity story in this case.
And any other precious metals that you're high on right now? Because look, silver actually outperformed gold, we know, last year. That seems to still be on a tear. Copper's been going crazy. Platinum, tin. I mean, it's kind of like pick a metal, any metal, right?
Yeah, I mean, it's been a fantastic run for the commodity sector and metals in specific. From the precious metal perspective, gold is our preferred way to play it. But one of the things that we are looking at is the broadening to some of the more industrial metals. We do think part of our outlook for 2026 is a broadening of this growth story, a cyclical recovery, and obviously with the investment in infrastructure and AI, those industrial metals are going to be beneficiaries.
How do you define quality? The word's way overused right now. It's driving me nuts. I mean, is it a ratio basis? Do you look at financial ratios to consider quality?
Yeah, I think when you think about quality, a lot of it comes down to balance sheets, and you want to look at things like leverage. You want to look at things like cash flows. That's the way that we're thinking about.
Is cash flow stumbling? Is free cash flow growth stumbling right now? I don't see it.
No, I mean, on the margin, when you look at the hyperscalers as an example, where you've seen these mega cash flows. Yes, part of that cash flow is now being redirected more towards investment, but not to a degree that gets us concerned.
I'm sizing the control. Nice of you to wake up, Cy. And he notes that my oldest son is named Cash Flow. I mean, it works out great. Okay, can we go further academic questions?
Do it.
What's it like to sit on the edge of the South Lawn at UVA? And my grandfather would talk about UVA's Commerce School. Mm-hmm. It's one of the most prestigious degrees in America. This is back pre-Depression almost. Wow. What's a BS in commerce? How do you study looking out on the lawn at UVA?
Charlottesville's a distracting place for a number of reasons. It's one of the best places in the world, but we've got some of the best professors in the world, and someday I hope to.
And they're really cranking still an old school 20th century commerce, aren't they?
They are, and one
of
the
liberal arts with the fancy stuff.
Yeah, and one of the great things about the school is that they bring together, kind of traditional academics with practitioners who come back, and so you get sort of the.
That's the best. That's what I would want if I were a student. Total. People out there like in the industry who are coming in and teaching.
How do you bring it to life? How do you apply these theories to practice?
Do you talk Greek and Latin with Bob Michael?
Alpha, beta. That's about as far as I get.
Stephen Parker, thank you so much. In charge of Greek letters at JPMorgan Private Bank, he's co-head of Global Investment Strategy. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hugely qualified to speak of the continent, and we talked to Ebrahim Rahbari and Golnar about Iran. Alexis Crow has an earned credibility at PwC. Her work out of St. Andrews in the London School of Economics is noted, and also a great perspective to write blistering, nasty notes for PwC, where people in Europe go, oh, how rude. Okay, so on Europe, you don't mince any words. If they don't seize the moment now's the time. What a Macron, Metz, and the rest of them. What a Starmer and the whole craziness in the UK. What do they need to do in 2026 to change the debate?
Thanks so much, Tom, for having me here. We highlight this as the key investing theme for 2026. Is the moment for Europe to seize on the savings and investment union and really actually moving to close the private pensions gap, where pensioners in Europe in the private space hold less than 10x of what they have in the United States. So for macroeconomic reasons, right, just slowing growth, demographic reasons, geopolitical forces that you mentioned of the U.S. withdrawal and isolationism, means that Europe is going to have to step up spending on infra. And we've seen this obviously with the Merz team and Germany actually ticking up in growth. And we see this across the board with insurance companies needing to find assets that will generate returns over the long term.
I don't see it. I got a Draghi letter out that everybody hangs on, and I'm sure you read every word of it and responded to it. Lagarde's been talking this up for years, and on and on and on. I'm at Café Saint-Roger in Paris, and everybody around me is 50 years old and retired. That's the reality. They don't want, I'm sorry, They don't want to work. That's all there is to it.
Ooh, those are fighting words,
No,
Tom.
I'm sitting there in the cafe having a perfect omelet. Everybody's reading Le Figaro and whatever, and they're going, Macron.
Can they have cigarettes there anymore? I don't know. Yeah.
They all retire at 50 years old as a stereotype.
All right, so we've got the situation in France, and France usually sits a little bit between Northern and Southern Europe, particularly on the fiscal side. What you do have is a cultural shift where Germany has removed the debt brake. As we know, Italy has also remarkably reduced the fiscal deficit. So the situation in France, which you acknowledge, yes, it's a hot button topic. Unfortunately, it's their own version of myopia when it comes to the policy debate. However, you have a record high labor force participation rate actually coming out of COVID. You've actually got record amounts of capital coming into the startup space. A lot that the Macron government has done in the orange economy. French workers are actually working more hours. They're working more hours on the weekends. We actually see this in OECD data. What I think really needs to happen, Tom, is that you've got to have consolidation of Eurozone lenders. That's where we really start to see the ability to move non-performing assets out of banks that are earning negative yields and into a different type of financial asset.
So Paul Donovan at UBS talks about this. Are you talking about a bank roll-up? I don't see it. I mean, David Harrow and I have been waiting a long time to see cross-border bank mergers.
I still think this can happen.
Okay. How much is the ECB a part of everything that you're talking about and a part of sort of this leg up, perhaps, that Europe can take in 2026?
Thank you, Alexis. So I actually think some of the coordination between regional lenders and the central bank is underestimated, right, in the extent to which they can drive this forward. You speak to some of the G-SIB CEOs in the Eurozone, they are very focused on this. And so I actually think their coordination with the ECB can move this forward. We've seen Madame Lagarde actually say, hey, we need to have more sovereignty when it comes to payment systems. Maybe we should move off certain, US credit card providers. And I think that's real.
Tell me about James Dimon, and he's got a digital experiment in the United Kingdom. Can the American banks go into Europe and do American banking? Culturally, can that work? This is what you're expert at.
It's interesting. So not only just on the digital asset side, but just on the consumer bank side. I was actually speaking about this last night with a client. I mean, American banks can do retail very well. And so I think there is space to do that, not only in the UK, but also across the Eurozone. The other side of this as well is when we talk about the ability to close the pensions gap and take a book out of Wall Street, what I think also needs to happen is you've also going to see Latin American banks coming in and supporting pension and investments. So it's not just European banks. I do think that American banks will have a space.
Alexis Crow of this PwC. We continue an extended conversation here. We had Golnar Montavali in earlier from London and Iran, but this is a treat, and it lines up for the transatlantic soiree. I talked to Pharaoh.
Yeah.
Okay, he's got new lederhosen this year.
Oh, I'm so happy.
Over to Davos. They're going to be over in Davos. Bramo. I think Anne-Marie Horton's going as well.
Okay.
Because the president will be there.
Yeah, it's going to be crazy.
I've been there when the president was there. So I have this, you're going to love this, Alexis. You know what it's like. They call me up at the World Economic Forum and they go, Tom, we want you to do a seminar. And Dr. Schwab wants you to do it. So they line me up with this total killer seminar, anticipation, packed room. Unfortunately, 2 rooms over the Secretary of Treasury, Steve Mnuchin, on a spur of the moment notice telling people all that. The entire room was me, 4 panelists, and Adam Toombs sitting in the middle of the room empty. That's how Davos rolls sometimes.
I would have sat in your session, though. Don't worry, Tom. But when you look at geopolitical tensions right now. We were talking earlier in the show about how the U.S. market has really largely been ignoring what's happening in Venezuela and Iran, and at least for us in Greenland. Is Europe going through the same thing? Are they no longer thinking Ukraine? Are they now not thinking Iran?
Great question, Alexis. And I think we really have to retract back outwards and say global markets. And global markets, by and large, do not care about geopolitics. They shrug it off, right? Interesting that the single largest spike that we had in the VIX, in the volatility index, happened when investors and market participants were concerned about an unwinding of the carry trade with Japan. Mm-hmm. So it's not geopolitics. It is monetary policy.
Thank you.
that really
Thank you.
moves
She's talking my
markets
book. Continue.
today. It is our addiction to the cost of money. It's Sintra, it's Jackson Hole. Now, of course, what's interesting, the elephant in the room, is what happens when some of these two converge, right? And political risk, monetary policy, and that's something that we're facing in the United States today.
Okay, can we do an audible here? I got to do this. I mean, Alexis, folks, you look at her bio and it's like, okay, did you have any fun in school? Like, all she did was work. It was like, get a life, Alexis Crow. We're this with PwC. I got all these the hot air, Alexis, and I'm sure PwC, it's the same way. AI, EIO. From where you sit, is AI going to replace intellectual input into the service sector of the United States of America?
I know this is some of your headlines on the data surrounding labor markets and the banks here. When we think about the growth of private assets, private markets, alternative assets, and the need for highly specialized analysis and intelligence surrounding this, that's the type of job that AI doesn't touch. It can augment, but it doesn't necessarily touch. So I think we're going to have to move higher up the skill chain. Actually, where markets are growing in terms of private markets means that you will have to analyze it.
But somebody at LSE who did differential equations like I didn't, is the whiz kid from your LSE, is he threatened by AI at 24 years old?
It's all about relationships. This is the one thing that we're training people to do. It's all about the way in which you engage with clients, the way in which you can be nimble and flexibly respond. And that's not something that's necessarily taught in the classrooms.
You're a linguist. I mean, I'm looking at your bio. All right, obviously English, French, Spanish, fluent, working knowledge of Italiano, parlo poco Italiano.
Yeah, well, Golnar's the same way. She has 4 languages. If you don't have 4 languages today, you can't rock.
And Portuguese, let us not be. And I have another question for you, Alexis, just quickly. We'll get back to business in a moment. Do people call you Alexa? Because it really frustrates me. Like by accident. They want to call you Alexa, and then their Alexa goes on if it's in the room.
You get that a lot?
I get it.
The thing that perturbs me more is Alex.
I think Alex is kind of cool. There's a cool factor to Alex. Just don't call me Alexa. It's just
Sweeney, I talked Duke basketball. This is Lisa. This is just like, the level of girl talk this week has just been
between
too
blue
much.
jeans. I mean, Tom's just trying to jump in here. Earlier when we were talking about oil and the Strait of Hormuz, I saw you next to me, like nodding your head.
Yeah.
Talk to me about oil and a market there that seems to be ignoring all of the geopolitical risk around it.
Okay, it was right to ignore Venezuela. Okay. And so market participants completely underestimate or overestimate the extent to which Iran and Venezuela can bring supply to the market. So maximum I think Venezuela can bring is 0.7 million per day, which is a dent in global oil supply of 100, or demand of 100. So I was nodding because 20% of the global daily final demand comes from the Straits of Hormuz. Mm-hmm. And to your colleague's point, it doesn't necessarily just need to be Iran that would take an action. Any congestion in the Straits of Hormuz could stop that. It's not only 20%, it's also the lowest cost, right? And so it's integral, as we know, this has become integral to European final demand as well.
Alexis Crow driving the market higher. Futures up 11. 20 minutes to the opening here. NASDAQ up 0.5% as well. One final question. So the wind, a breeze at St. Andrews is 15 miles an hour. Okay. So you're ensconced up at St. Andrews. You got a visceral feel for Scotland. I see Farage and Reform coming on in Scotland. Can Farage pull off this parliamentary miracle?
I know we chatted about this the last time. I think it is possible. It is possible.
I agree. I got a lot of people telling me it's not possible.
Yeah, I think it's possible. A lot of people said Brexit wasn't possible.
Yeah.
Yeah.
Okay. Thank you. This is wonderful. Are you going to Davos? Are you going to be with them?
I will not be there. I'll be here in the trenches.
I'm not going to be there either. Okay. Lisa Mateo said you can't go. So
it's a trip. It's just such a trip to get there.
It is, but with the Sikorsky, it's easier.
Okay. Maybe for you,
Alex Crow, thank you so much with PwC. Greatly appreciated. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The phrase is rip up the script. And when we are so advantaged to have a guest with uncommon wisdom, we rip up the script. With Ebrahim Rahbari, I'm supposed to say, what's the dollar going to do? What does Japan do? Our Sunday evening as they look at intervention here to 158 yen. He was definitive with Catherine Mann and Willem Bouter. It's Citigroup holding courts at Absolute Strategy Research now. Ebrahim, today's conversation is different. You were born in Tehran. All of my work and interviews, including with our Golnar Montevalli, is Americans are wildly ignorant of Persia. I mean, it's breathtaking, the tension with the Arabs, the history back to biblical times. But I want to bring it to the modern point. What upsets you most about the rote media coverage of Iran right now?
That is a very loaded question. And I think, like many Iranians abroad, and I'm mindful that I grew up outside of Iran. So it is the perspective of a deeply vested and interested outsider. It is a moment with a potent mix of hope and apprehension about the developments there. And that is perhaps the area where the media sometimes misses the balance of risk and the potential for improvement. So the most recent developments in Iran brought with them probably untold levels of unusual violence that didn't quite fit the pattern that we've had we've had in the past, and that is again something that is both enormously risky, but perhaps is a price that needs to be paid for.
Shannon O'Neill at the Council on Foreign Relations makes clear that Venezuela has been torn asunder. I don't hear that about Iran. With all of your family contacts there, the heritage of your grandparents and your parents, with whatever their politics was as the Shah exited years ago, is the state of Iranian society still there? If there was some form of change, is there a bedrock foundation to rebuild a more democratic, more capitalistic Iran?
And I think that's the million-dollar question. And to be quite frank, I am, from afar, more concerned about the risks to stability in Iran versus Venezuela. Iran is a multi-ethnic, multi-religious, multilingual country that has been held together by a combination of a Persian majority culture and governance. And the exact question of whether that minimum of governance, because we know governance right now in Iran has been weak and weakening for many years, whether that could be torn apart as opposed to rebuilt for a better world.
When you look at the geography, Alexis wants to jump in here. Let me make this real quick. When you look at the geography, Venezuela is 10 miles from Paul Sweeney and Aruba. It's not Cuba, but it's close. To so many Americans, it is the far side of the world. Do you feel that way about it? Or can America extend out there and avoid the missteps of Iraq?
So I think it will be challenging to map out what the Middle East looks like the day after. And developments there are extremely fluid. The very fact that we hear that the Saudis and that the Qataris were reluctant to open their land and airspace to the US to intervene, the fact that they are talking to Turkey and Pakistan about new alliances, that's a very different environment between Saudi and Iran than we've learned to even not so long ago. And that again speaks to the major risk for more instability that were obviously illustrated most extremely in the Iraq case. It doesn't have to get as bad as it did back then, but I as Willem Bouter used to say, no matter how bad things are, they can always get worse. So I think that is a risk we have to keep in mind for Iran, despite the hope that I have for a better future there.
And no military action, at least right now, from the U.S., but we do have these tariffs, 25% tariffs on countries doing business with Iran, which sort of puts China in a weird spot and I guess risks yet further clashing between the U.S. and China. But what do those tariffs really mean to people living in Iran and having to deal with the day-to-day?
Well, that's a key point. I mean, they don't mean anything good. So I think that action is a signal, it's a symbolic signal of support. It is perhaps a message towards Russia and China But when it comes to, I think, the key aspect, which is to show support to the population, there's absolutely no benefit. If anything, there is some disservice to the protesters, which have, of course, been suffering from the sanctions. So it's the IRGC that has benefited.
Let us turn to the currency market and what we see from foreign exchange. But thank you so much for all of Bloomberg for these comments this morning. Ebrahim Rahbari is with us, and we welcome all of you around the world here to his skill set of the broader economics. Why won't the dollar weaken further? It's just 99 DXY. Is it just the yen, or is there something more global to dollar resiliency?
I would say it's two factors, and one of them is that the U.S. economy looks pretty good, and that is an environment where, for example, the Fed may not need to be cutting interest rates anymore at all. We're seeing signs that even the labor market, which was the weak spot, may be starting to stabilize. So it's good news in the U.S. that is part of the picture, and encouragingly, it's not so much that it's bad news in the rest of the world, but simply that global investors had been positioned for some further dollar downside. But I would overall characterize it still as carrying a whiff of maybe not as much debasement as people had worried about.
So you're thinking maybe no action from the U.S. Fed this year. Are you in the camp with JPM, where they are predicting perhaps a hike?
Excuse me, Ebrahim, that's JPMorgan.
JPMorgan, I do that. I know he knows that. But next year, what are we looking at here? Maybe a hike? I mean, is that in the cards?
I think it could be on the cards, yes. Yeah. I think that, of course, we have many questions that we're debating hotly about the future of the Fed and its leadership. But I think the place to watch right now for signals for the future is Australia. Because in Australia, we saw the smallest signs of inflation possibly starting to rise again. And as soon as that happened, the central bank moved from cutting interest rates to potentially signaling a hike that could come as early as next month. So as soon as inflation in the US, which is dormant and very benign, but as soon as inflation is starting to rise, I think the Fed would find it relatively easy to move towards a hiking bias. But for the time being, it's about pricing out cuts, not yet moving towards a hike.
Yeah, and I see some Aussie dollar strength here. I haven't looked at this in ages. I mean, the last time I looked at this, the Veronicas were at the top of the charts. Okay, Australia's rocking it. Does that signal a China recovery? Can I go to simplistic Tom Keene 101? And we just had China Beige Book in, and they said the gloom on China is way overplayed. Is that why Australia's popping?
It is one of the reasons, even though I would put it more down to domestic strength. So the Australian housing market is strong. Consumer spending is growing 6-7% a year at the moment. Unemployment never rose. So I think there's a big domestic element. But at the same time, there's a potential Asian reflation story out there. And again, it's a little bit similar to pricing out cuts in the US. I think it's pricing out maybe the doom in China as opposed to a real strengthening. But between Korea, China, Japan, I do see upside potential over there too.
Ebrahim Rahbari, thank you so much. Really appreciate it with Absolute Strategy Research. And thank you so much for the comments of your family and your experiences with Persia and with Iran. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Lindsay Newman is with GZero Media and Geopolitical Risk Expert and joins us from King's College, which is a good place to be from for this analysis. King's College, Lindsay, as you well know, owns the study of war. Are we at war?
Venezuela? No. I mean, absolutely not. Look, for Trump, Venezuela was always about how he defines U.S. national security. And it was never about a turnover in power there or democratic transition. It wasn't about domestic politics for Venezuela. It was about national security as defined by Trump and his administration around immigration, principally around drugs and narco trafficking, and of course, around energy assets. And that's why we see what we see unfolding right now, which is you have to hold sort of a confluence of conflicting ideas in your mind, which is on the one hand, Trump is pleased with the outcome of the removal of Nicolas Maduro, but who stays atop of Venezuela right now? Well, it's Delcy Rodriguez, his number two, somebody who herself is under sanction by the U.S. And that's what we're seeing unfold. And the big question, Tom, which is what you were just hitting on, is about political risk in sort of the classic sense of political risk. Why is the market not yet responding? Well, there's not that much vulnerable investable assets in Venezuela at this moment in time. But the question is, are investors going to go back in? And Trump certainly hopes the answer is yes.
I mean, I really get emotional, folks, when I walk by in any given town, some memorial to the people who participated, injured, died in Vietnam, and they call it a conflict, which drives me absolutely
call it what it is.
Bonkers.
What it was.
Okay, so there's Alexis with a proper question, Lindsay Newman. What do you call this stuff? Is this like, are we doing police actions with our military?
Yeah, and Tom, look, in my line of work, there is a difference between war and conflict, and words matter. When you say things like tension, it's very different than, riots and vandalism and violent riots is a very different thing than protests. For example, when we look at, in the case of Iran, it's a very relevant conversation to be had. Look, this is a world in which, we knew Trump and his administration were going to be more ambitious this time around. It depends where, whether you approve of or you like what he's doing. We knew when he set out that executive orders on day one in office about foreign policy. This is not an America first that's isolationist. This is an America first that is looking to remake the world in the image of what Donald Trump and his administration view as how it should be. That's what we see going on right now in Greenland, Venezuela, all these locations where there is activity, whether it is hot activity or whether it's diplomacy that's happening right now. But the point being is that this administration is using a vast array of tools in its toolkit, not just sanctions and tariffs like we saw during the first Trump administration, but it has demonstrated a willingness to force posture and to deploy force.
Lindsay, there's this decision now, at least for the moment, a military action has been paused against Iran. So the U.S. now turning to economic pressure on Iran, rolling out a host of new sanctions. Is that going to get the job done? What kind of sanctions are we looking at to move the needle here with Iran?
Yeah, Alexis, as you rightfully point out, the Trump administration imposed 25% secondary tariffs this week, and then just yesterday imposed fairly limited sanctions on targeted individuals within the Iran regime. The story here is that it seems as though we were very close to a limited military action going ahead in the middle of this week, that at the last moment, there was intervention for Trump that suggested, this was not going to reach its aims and there was going to be vulnerability for U.S. assets and personnel in the region. This is not the end of the story. We know that the USS Abraham Lincoln is moving within the region as we speak. But the issue here is a lot of this rests now, the ball is somewhat in Iran's court. Iran is somewhat in a double bind because now that the pressure is sort of alleviated, what will Iran do as people leave their homes and the internet comes back on? They will have to continue to apply repression. That is their only lever right now. And if doing so means that the U.S. continues to watch and then say, well, this is no longer acceptable, then we can still be back in the world of some sort of action.
Can I do a nerd academic question?
Well, please do.
And now, folks, for Lindsay Newman at King's College London. Lindsay, what is it like to work in a program with the halo of Sir Lawrence Friedman Emeritus hovering over you at King's College? He owns the high ground of this analysis. What's it like working there with Emeritus Professor Lawrence Friedman?
Well, obviously, it goes without saying, that he is, one of the greats. And I am a visiting research fellow, so my affiliation is, fairly flexible and I have quite a lot of freedom in what I do. But it's a wonderful institution that has been at the forefront of, all forms of these, all forms of conflict and war, as we were talking about earlier, and thinking around that for as long as we've been doing this.
I can't say enough, folks, about Lawrence Friedman. I've done a bunch of things with him over the years, and with Thomas Schelling at Maryland and at Harvard. I mean, Thomas Schelling and Lawrence Friedman own the high ground on conflict and war. Lindsay Newman, thank you so much for joining us.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.